Hello and welcome. I know many of you are at the beginning of your entrepreneurial career and want to learn a high income skill. Today, I will present you one of my favorites and the one that brought me my first million, and that's Forex. I will provide the mini introductory course for beginners, and then later we will deep dive into each aspect more extensively and in more details. These videos will be based on your interaction with our content, so don't forget to follow and to like our content. Well, what is Forex? As many of you probably already know, trading is based on the price difference between the currency pairs. For example, euro versus pound or dollar. In this market, money can be made both when price rises by opening buy positions and when it falls by opening short positions. So we can make money both times. You're probably wondering how we can make money and anticipate these market movements. Well, the best and shortest answer I can give you is through technical analysis of the price, by calculating probabilities, and by using appropriate risk management. What do you need to start this business? Well, 4 simple things: a phone or a laptop, TradingView, a broker. I recommend IC Markets. I'll give you a link in bio. A trading platform that can be MetaTrader 4 or 5. I use MetaTrader 5, but you also have C-Trade. And now, before we start the actual trading, let's do a quick tutorial on TradingView. This is the website, tradingview.com. It's completely free for a month, and then you get access to almost all currency pairs in the world and almost every pair. You will have also a link in bio. As you can see here, we have stocks, funds, futures, forex, crypto, indices, bonds, and so on. Okay, and if you simply search for them, you will find everything you need. You can check them. The first and most important advice I can give you is to change the color of your charts. As you can see, mine is blue and black. The color are chosen with a specific purpose, to induce emotions. They are psychologically chosen to make decisions based on emotions and make you lose. As you can see, again, my color are blue and black, but mine were also red and green. As you can see, I simply change the color from here. All you have to do is to press double click on the candles and you can change the color. Blue is for buy, black is for short. That's simple. Here in the upper left corner, we can see the time frame selection button where you can select your time frames. You can see the candle styles. I mainly use candle chart and line chart, as you can clearly see here. The indicator button. From here you can select the indicators. I can search for indicators here. I have some of the most used ones here. You can create your own scripts. You can find technical indicators, financial, and so on. I recommend trading with as few indicators as possible or even none at all. Although most gurus will teach you to trade with indicators as if they found a secret formula, my advice is to avoid them. The market is not dictated by indicators, but the other way around, and this can give you false signals, thus leading to potential losses. Also, on the left side, we can find tool buttons that TradingView offer us. Okay, all of them are free, so you don't have to pay a subscription to use them. Here we can find cursors from which everyone can choose what they want. As you can see, you can choose dot, you have a dot. You can choose arrow, you have an arrow. You can choose the eraser that will help you delete drawings. You can choose the new edit feature, that's a magic button, and you can do that. Trend tools, from which we'll use Trendline, which I also have in favorites because I use this a lot, and other type of trend lines and lines that we will not really use that much. Now we have another important tool that will help us in the future, and it's called Fibonacci, and it looks like this. That's the Fibonacci. Below in the toolbar called projection, we can find long position, which is this one, but also we can find short position, which is this one. These tools help us measure positions and identify risk to reward. And further down we find tools which we draw or mark certain price level, brush that can help us create drawings, arrow to highlight possible moves, As you can see, I also have them in favorites. A rectangle, which we use to mark certain levels at which we want the price to reach or to bounce from. Based on the risk appetite and the time duration, there are three types of traders. There are scalpers, those who stay in trades from a few seconds to a few tens of minutes, possibly an hour. We also have day trader. They have their transactions open from 1 hour to a few hours. And then we also have swingers, and not the ones that you already know, but individuals who stay in trades for a few days or weeks. If you remember, I mentioned that up here in the left corner there is a button that you can use to select your time frames. To understand each time frame, basically it's represented by a candle. For example, on the 1 minute time frame, the candle duration is 1 minute, so each candle is a minute, and so on to larger time frames. On the daily, each candle represents a day, so here each candle represents a day. On the weekly, the duration is a week. Remember that the trading week in Forex is 5 days, from Monday to Friday, so not 7 days, only 5 days, and so on until the candle of 12 months. Okay, for advanced traders, we have also seconds that can be used, but considering most of you are still beginners, I would recommend staying away from those time frames, as they can easily deceive you and can make you lose your money. Personally, I would recommend trading larger time frames and medium time frames, like from 15 minutes and up. Since many of you are very new, I will present you some main terms that you will encounter and use daily, and it's very important to use them. So we have spread, pips, SL or stop loss, take profit or TP, we have risk to reward or RR, we have lot size, we have bullish, bearish, and also we have these sessions, which are very important. So now, talking a bit about the spread. The spread is an aspect that many gurus don't talk about. It's represented by the price difference at which the pair is offered to you by the broker and its actual price. We must understand that brokers are businesses and they need to be profitable. So they offer us the price with a small difference. Depending on the brokers, some have larger differences, some have smaller differences compared to the actual price. So be careful, as the spread can vary depending on the session and news. It can significantly affect your trades. In general, the spread is around 1 pip or even smaller, and the spread is larger. I recommend not trading. So to make you understand, let's say the price is at this level and we want to open a long position. Okay, if you had no spread, the position would be open here, but with the spread, the position will be open like this. So that's the spread. That's the level you want to open the position at, and that's the level you get your position open. A pip stands for percentage in points, and it is the unit of measurement for price variation. It's used to measure the price of a currency against another currency. So that's how we measure the movement of a pair. Okay, so if we use the rectangle tool, you can see that the price moves in pips, as you can see here, but we are on a big time frame. Let's go to 1 minute. Use again the rectangle tool. From that level to this level, price dropped 3.8 pips. So that's how we measure price. The more pips you catch, the more money you make. It's easy. Stop loss and take profit are levels at which our trades are automatically stopped, either to minimize our losses or to maximize our profits. We use them to stop trades in case the price goes against us, but we also use them to secure profits. Maybe we are not in front of the chart and price reaches our desired level and bounces off. Thus, our TP closes the trade and there are no chances of loss. So let's say you open a trade. This is your stop loss. So if price comes here, your trade will be stopped. This is your TP or take profit. So let's say you open a transaction that looks like this. When price reach your level, it will be automatically closed on a profit, and that's how we protect ourselves in these markets, using stop loss and take profit. RR or risk to reward is the calculation we use to measure the potential gain against the risk of losing. For example, let's say I have an RR of 1 to 3. In this case, I risk $1 to make 3, so our trade will look like this. So you see, if price goes against me, I lose $1. For example, if price goes in my direction, I get $3. Lot size or lot size value is is the actual size of the position we enter in the market with. In short, it represents the amount of money we can make or lose in a trade. And to give you a short example, for one standard lot, which is 1.00, we have $10 per pip. In 0.10 lots we have $1 per pip, and if we have 0.01 lots, so we have 0.01 lots, which equals to $0.10 per pip, and so on. And of course we can also have like 2.3 lots, which equals to $23 per pip, and so on. Okay, so if we catch a 10 pips with one lot, we'll have $100. Okay, I will show you a screenshot from MetaTrader to see. And now it's time to talk about types of markets. Today we'll talk about bearish and bullish. There's another type of market that we'll talk about in other videos. It's called consolidation, but as you are beginners, I do not recommend trading in consolidation. I would advise you to trade only in trend continuation when you have bullish or bearish markets. So basically in a bearish market, the price is rising, so it's pushing upwards, creating new highs. As you can see here, that's a bullish market. In a bearish market, the price is going down, pushing toward new lows. We can make money again from both selling and also buying this market, so that's a bearish market. You don't have to worry if you miss a move, because the market moves up and down. It doesn't have a single direction. As you can see here, price moved down from this level and now it moves back up again. And yeah, you don't have to worry, because price is not moving in a single direction, otherwise everyone would make money. The price always oscillates and moves in both directions, so that every type of traders can trade and make money out of this market. As you can see again here, this is a bullish market, this is a bearish market, so every type of trader, even if you want to go long, you can make money going long. If you want to go short, you can make money going short. You just have to place yourself the correct way. Now, sessions, we only have 3 main sessions that we trade, and they are as follows: Asia, London, and New York. Based on your current location, the time of them varies. Okay, based on my location, I live in Romania. Those are the times my session starts. So I have Asia, London, and New York, which starts like this. Asia starts around 1 a.m. to 2 a.m. It depends. The main volume is between those 2 hours. London session starts at 9 a.m. but the main volume is between 10 and 12, and New York starts at between 2:30 p.m. and 3 p.m. But you also have the New York Stock Exchange open that starts at 4:30 p.m. That gives you a lot of volume. So yeah, those are the sessions that I trade. I recommend trading during London and New York, because those are the largest sessions and most of the big players are here. And in the Asian session, the spread is considerably higher, so it's not worth trying to trade during those hours. So yeah, that was all for today. This was our first video. We'll have a playlist of 6, so if you enjoyed it, please don't forget to give us a like, don't forget to follow our page and to turn on notification, because we'll post a lot of stuff, a lot of free stuff, and you don't want to miss it. Bye.